Hello dear students. Today I am going to explain you posting of subsidiary books. We have already studied about subsidiary books. We know how to prepare various type of subsidiary books as we have already studied it in earlier chapter. That is purchase book, sales book, purchase return book and sales return book. We know how to prepare it. Now in this session, we will be learning how to post them in ledger. That means today we are going to learn posting from subsidiary book with the help of this illustration. As you can see here various transactions are given. On the basis of that, we have to prepare purchase book, then sales book, after then purchase return book and sales returns book. We know that here, as in purchase book, name of the traders are given, that is Hemal and Viral. So we know that they are our creditors. Similarly, the name of the customers are given in sales book and they are our debtors. So our first step is to open purchase account, and the accounts of all traders who are creditor for us will be their accounts will be opened. So here Hemal's account, then Viral's account will be opened. Then after then we will open sales account. Then all the accounts of all customers which are shown in the sales book are opened. That is Aisha's account, Afsana's account. Then we will open purchase return accounts. Then after then Sujit's account. Here it is. Then sales return account will be opened. Then Snehata's account will be opened. So as you can see here, there are total 14 accounts which are opened here. That is on the basis of subsidiary book, that is purchase book, sales book, purchase return book and sales return book. On the basis of that, four main accounts, that is purchase account, sales account, purchase return account and sales return account will be opened, and the accounts of all customers and traders which are shown in the sales book, purchase book, sales return book, purchase return book will be opened. So in this way, there are total 14 accounts which are affected and which will be opened. Now first, let us see posting of purchases book. Here the book shows the names of the parties from whom goods have been purchased on credit. These parties are now, in accounting terminology, creditors of the firm. That means here Hemal and Viral are the creditors of the firm, and their accounts have to be credited for the respective amounts shown in the purchases book here. That means here Hemal's account will be credited by rupees 1800 and Viral's account will be credited by rupees 800. And the total of the amounts column shows the total credit purchases. Here total credit purchases is 2600 made in a period. So the total amount is debited to the purchase account. So let us see here. The total amount, that is rupees 2600, will be debited to the purchase account, and in particular column we will write to sundry creditors. Okay. One thing you must remember, that the name of the account which appear on debit side, with that you have to use the word to, and if you write the name of the account on credit side, so in particular column before the name of that account you have to use the word by. Now as Hemal is our creditor, So here in Hemal's account, we will record the amount that is 1800 on credit side. And our another creditor is Viral. So here on Viral's account, we will record the amount on credit side, as his name is also shown in purchase book. So here we will record it on credit side to the Viral's account, that is rupees 800. So here one thing you must notice that here purchase account is debited by rupees 2600. Here it is 2600 on debit side of purchase account, and Hemal's account is credited by rupees 1800. Similarly, Viral's account is credited by rupees 800. That means here 800 plus 1800, which is equal to 2600. So here you can see that the total of the amount put on the credit side, that is 1800 and 800, is equal to the debit side, and thus here double entry is completed. Now let us see ledger posting of sales book. Here names appearing in the sales book are of those parties who have purchased the goods on credit, that is Aisha and Afsana. The accounts of the parties have to be debited with their respective amounts. That means here Aisha's account will be debited by rupees 2700 and Afsana's account will be debited by rupees 4200. And the total of the sales book shows the credit sales made during the period, that is 6900. So here the amount is credited to the sales book. So let us see. Here 6900 will be credited to the sales account. In particular column, we will write by sundry debtors account. We will also enter date, that is March 31st. Then 2700 will be debited to debtors, that is Aisha's account, and 4200 will be debited to another debtor, that is Afsana's account. So as you can see here, the amount put on the credit side is equal to the total of the amounts put on the debit side. Here 4200 plus 2700, which are put on the debit side of respective debtors account, is equal to 6900, which is put on credit side. Thus the double entry principle is followed here correctly. Here you can see that in the particulars column of each customer, the account having an opposite effect, that is sales account, will be written. Here it is. And in sales account, sundry debtors are written. Here it is. Now let us see ledger posting from purchase returns book. Here you can see that here name of the trader is given. That means they are our creditor, and we have returned goods to them. So let us see ledger posting from purchase return book. Here we have returned goods to our creditor Hemal, that is of worth rupees 300, and to Sujit rupees 200. So our total purchase return is rupees 500. So here the total of purchase return book, that is rupees 500, is posted to the purchase return account by writing here in particular column by sundry creditors account, date March 31st as per the purchase return book. And now The amount of the goods returned is debited to the account of the creditor or supplier. So here we have returned goods worth rupees 300 to our creditor Hemal. So we will debit it to Hemal's account. And in particular column, we will write to purchase return account. Then we return goods to our another creditor, that is Sujit. So we will record it on debit side of Sujit's account. Here it is 200 on debit side. Sujit and Hemal are our creditors. And as we are returning goods purchased from them, so that means here the balance in our creditors account will be reducing. And we know that creditors, that means it is our liability. Liability has credit balance. And if any kind of reduction is there, so we will record it on debit side. That's why here we recorded it on debit side. That is 200 in debit side to Sujit's account and 300 on debit side to Hemal's account. Now let us see ledger posting from sales return book. Here goods worth rupees 700 is returned by our debtor Snehalata, and goods worth rupees 450 is returned by our debtor Afsana, and our total sales return is 1150. Here the amount of the goods received is credited to the debtors or customer account and debited to the sales return account. See, here sales return account is debited by rupees 1150. So as per the rule of real account, because sales return account is a real account, so as per the rule of real account, which says that debit what comes in and credit what goes out, according to that rule, sales return account is debited. That's why we will record it on debit side of sales return account. And the debtors account will be credited by writing in particular column by sales return account. Here it is debtor Snehalata. In Snehalata's account, we will record it on credit side. Here it is by sales return account. In particular column, we will write, and amount is 700. And let us see our another debtor who has returned goods to us, that is Afsana. So here also we will record it on credit side of Afsana's accounts 450. And in particular column, we will write the name of the account which has opposite effect by sales return account. So here you can see that as per the modern approach, we know that debtors is our asset and asset has debit balance. But as our debtor has returned us goods, that means they are not liable to pay us that much amount. That means the balance in our debtor account is reducing. So here we will record it on credit side. That's why here 450 will be entered on credit side of debtor Afsana. Okay, so in this way we have to do posting from various types of subsidiary book. So I hope you would have understood this. That's all for today. Thank you very much.